You're being lied to about banking in Switzerland and Singapore. People all over YouTube claim that these two countries offer identical protection and cater to identical clients. But after helping over 1,800 people bank offshore, I know that choosing the wrong country can cost you thousands, even hundreds of thousands of dollars. So in this video, I'm going to give you an easy side-by-side comparison of Swiss and Singaporean banking, so that you can confidently choose the safest country to protect your wealth. And to start, let's dispel a few myths, because I've heard people say things like Switzerland is stuffy, legacy banks aren't what they used to be, Swiss bankers don't pick up the phone. And they'll say Singapore is the new Switzerland, has better technology, and the customer service is excellent. But these statements aren't entirely true. And this kind of misinformation, it doesn't help anyone. It's a huge oversimplification, and it just results in people applying for accounts in the wrong countries, instead of opening accounts with banks that actually want them as customers, which I'm going to help you do in this video. Now, I do want to make something clear. I actually really like banking options in both places. In fact, members of our team have lived, worked, and continue to bank in both Singapore and Switzerland right now. And we help clients open in Singapore and Switzerland equally, with the top banks in both countries. But the reasons to bank in Switzerland and bank in Singapore are very different. And these differences come down to the type of banking that each country specializes in. To make this a bit easier to grasp, let's use an example from another industry that has its fair share of misconceptions. Whiskey. I have with me two bottles. First, Johnnie Walker Black. It's consistent, reliable, and accessible. The other is a single malt from Macallan. It's distinct, sophisticated, and a bit more upmarket. Both of these are good bottles, but the Walker family, they weren't distillers. Instead, they took the best of what was available, blended it, and created an appealing offer to a wide range of customers. And Singapore has done something similar, bringing together the best global practices to create a renowned but accessible offering in the banking space. Macallan, on the other hand, took a different path. From the start, it focused on creating a distinct and refined single malt, carefully crafted, aged, and meant for those who are looking for something specific. It wasn't designed to appeal to the masses, but rather to offer a premium experience for clients with very specific tastes. In banking, Switzerland is much the same, designed for clients looking for specific services and benefits. But here's where things get tricky, because when you sit the bottles side by side, you might say that they look the same, Walker and Macallan, Singapore and Switzerland, but they're not. This Macallan, Switzerland, it requires about 4 times more money. And when you're dishing out 4 times more money, you should really know what you're looking for, what value you're trying to extract. Now, if you can't tell the difference and you're not looking for the specific characteristics that the pricier option offers, then you can probably get everything you need with less money over here in Singapore. Now, that's not to say Singapore banking isn't among the best in the world, because it is. But Switzerland is a private banking hub, and they offer some of the most sophisticated banking services available anywhere. Now, private banking is not what Singapore specializes in, and it's not why the vast majority of people open bank accounts in Singapore, even though Singapore does have plenty of private banking options available. See, for most foreigners, when they want to bank in Singapore, they're looking for premier banking. So while both countries are respected financial hubs, they serve different clients and offer different solutions. Which brings us to section 2 of this video. I'm going to tell you whether you should bank in Switzerland or Singapore, and I'm going to do this by asking you 5 very simple questions. And then after you decide which country is best for you, I'm going to give you a free gift, an expert assessment from our team, to see if you can actually go ahead and open your account without wasting any time contacting banks. But first, let's decide where you can open. Question number 1, how much do you want to deposit? If you want private banking in Switzerland, you should be looking to deposit at least 500,000 to 1 million as a minimum. On the other hand, premier banking in Singapore typically starts between 150,000 and 300,000. And for easy comparison, I'm talking in US dollars here. These are pretty standard deposits across most banks in both countries, though you can obviously see higher deposits at certain private banks. And if you have a higher risk profile, live in a high risk country, or have high risk wealth, you can expect deposits between 2 million and 5 million in Switzerland. And frankly, you won't even be able to access premier banking in Singapore with a high risk profile. But it's not just about how much money you want to deposit. It's also about what you want to do with that money. And that's why question number 2 is, how will you use your account? Because in private banking, you're not opening an account with the goal of using your money. Instead, you're putting it there to grow. And that's why the sort of services that you can access through private banking are all focused on one thing: making you more money. This includes asset management, tax planning, financial solutions like Lombard loans, and a whole menu of other services designed to grow your wealth. Now, Premier banking is totally different. Here, you're typically opening an active account, an account that you plan to use, albeit with higher deposits. And for that reason, Premier banking, it tends to focus on benefits that you can use in your day-to-day life, day-to-day banking, like multi-currency accounts, payment cards, and basically a more refined version of your standard banking relationship. So if that's what you're after, Singapore could be a better fit. But listen, I do need to jump in because before any of my private banking friends in Singapore contact me complaining about this video, I should point out Singapore does have really good private banking options, and we do help clients open these accounts. But like I said, most people don't go to Singapore for private banking unless they have a very specific reason to bank there. Which brings me to question number 3. Where do you have ties? Now, this is less important for Swiss banking because you don't need ties to Switzerland to open a Swiss bank account. But in Singapore, this is something that banks need to see. They need to understand your reason for wanting to bank in Singapore. And if you're coming in at the private banking level, that typically means that you're moving there, you're structuring your assets there, or you're living in a neighboring country, something like that. But if that's not the case, not only will you find Switzerland an easier place to open accounts, you'll also find Singapore banks to be tough to deal with. Though it can get a lot tougher depending on your answer to question number 4, which is where do you live? And I'm just going to come out and say it. Switzerland is a much easier place to open bank accounts for a wider range of people. That's not to say Singapore is difficult overall, but it is significantly more restrictive in terms of opening for foreign non-resident accounts. And if you live in the US, Canada, EU, UK, or a lot of other countries, there's a good chance that you won't be able to open a bank account in Singapore at all, because the banks in Singapore can be extremely tough on these countries of residence. But on the other hand, if you live in those countries, you can open accounts in Switzerland. Okay, now our last question, question number 5, is how did you make your money? Now, if you're a business owner, entrepreneur, or just a really good saver, and all your personal wealth is clearly shown through your years of working, you won't have any difficulty opening accounts in Switzerland or Singapore. Most banks will be able to wrap their heads around your money pretty quick. But if you have high-risk sources of wealth, crypto wealth, for example, or maybe you built and sold businesses in higher risk industries or even in higher risk countries, opening can be more challenging in Singapore and easier in Switzerland. So we'll put these up again so you can see them and you can look at each variable to see which one might make the most sense for your account opening. As you can see, deposit-wise, if you're coming in below 500,000, Singapore will be a better fit. Likewise, if you're just looking for more personalized banking than you currently have, Singapore could give you access to everything that you're looking for, especially if you're an expat, lead an international lifestyle, or you have clear and established ties to Asia. On the other hand, if you're looking to grow your money through wealth management, or you want to unlock private banking services like asset-backed financing or Lombard loans, then Switzerland could be a better fit. And this is especially true if you don't have ties to Singapore or the broader region, or if you live in a country that is restricted in terms of Singaporean banking, because Swiss banks are just more open and accepting of different client profiles. And lastly, source of wealth, higher risk, you'll have more straightforward onboarding and more options in Switzerland. So those are the questions and those are the variables you need to think about. Where do you stand? Are you more in line with Swiss banking or Singaporean banking? Traditional European private banking or more active personalized day-to-day banking? Or maybe neither of these options sound like a good fit to you. And that's okay too, because the point is, regardless of who you are, where you're from, or what you're trying to achieve through international and offshore banking, there are good banking options available, even in top banking hubs like Switzerland and Singapore. And that brings us to your free expert assessment. This is for anyone who's ready to open accounts in either Switzerland or Singapore or really any other country. And it's specifically designed for people who are looking to diversify their assets, protect their wealth, and who want access to better banks. You're going to get this 100% free. It's going to take you about 2 minutes to complete, and then our team of banking experts is going to review your information and tell you if you qualify to open your desired accounts or not. And if you don't qualify, we'll even tell you which countries that you should consider instead. To start your free assessment, all you have to do is click the link in the pinned comment below, and you can fill out your form right now. And that's it. You now know one of the biggest lies being pushed in banking. You know whether you should bank in Switzerland or Singapore, and you're even getting an expert assessment from a seasoned team of banking experts 100% free. But that doesn't answer this question. Are there better offshore banking hubs where you can access the specific services you want with even lower deposits and super reputable banks? Well, we only covered 2 of the potential options in this video. So if you really want to know which country is best for you, then make sure you go ahead and watch this video right here, where I break down offshore banking in 2025 and give you a list of 12 countries you might want to consider instead.